Thank you so much, Nisa. I guess let me introduce myself first. I'm Alex Batlin. I'm the founder and CEO of Trustology. Trustology is an institutional custodial wallet provider. We are based out of UK, and we are serving a range of customers from brokers through to funds and token issuers. And I'm really, really excited to be joined by Brad from CMT Digital. Brad, why don't you give us a little introduction to yourself?
Sure, thanks, Alex. This is Brad Koeppen with CMT Digital. CMT Digital is one of the silos under the broader CMT. CMT is a 23-year-old proprietary trading firm that is traded in the traditional markets from options, equities, futures, and commodities on a global basis. And CMT Digital is sort of the newest group within there. We actually started about 6 years ago when our in-house counsel got interested in Bitcoin, and that interest grew from our lawyer to our partners to eventually launching, making an investment in the space, to launching a trading desk, and then launching a venture capital fund. And then we also do a lot of community building work throughout the ecosystem, including the Chicago DeFi Alliance.
Would you like to give us a little bit of background as to what motivated you guys to start this and what are the objectives and the key results of the alliance?
Sure. Yeah. So sort of through the years, we started working with Imran Khan, who's based out of Chicago here from Token Daily. And Token Daily is sort of launched Volt Capital, which is a seed and pre-seed venture fund. Through working with him and his connections, he sort of had the idea like, hey, I'm connected to a lot of these DeFi protocols. They're trying to get connected to some more traditional trading firms as they sort of look to grow in that next phase of their business. And with the trading desk and the venture arm here at CMT, we've always been interested in DeFi. We haven't done any at scale trading in DeFi, but we've tested a lot of things. We're always trying to learn. So it sort of checked a couple of boxes for us in terms of, hey, we want to know more about DeFi. We sort of know a little bit about a lot of areas of DeFi, but we haven't really taken the time or had the incentive to sort of dig in and learn more about any specific protocol or any one area. So it made sense to us. So the idea was to take sort of the connections from Imran, take CMT, take Jump, take DRW, and a few other people out of Chicago, and sort of try to bridge the gap between DeFi and sort of traditional trading, right? Where a lot of these traditional firms in Chicago have already taken the leap to come into crypto, but they're all trading on centralized exchanges, right? And like you said, we believe in DeFi. We believe that there could be a really big opportunity here to create something very valuable for a lot of users on a global basis. Obviously, like anything crypto, it's still in its infancy. But if the right things are built and the right people are participating, we think this could be a big opportunity. So it was really about allowing us to learn more on the trading side and on the venture side, allowing these DeFi protocols to get to know us and other trading firms, and just sort of broadening the knowledge base there, letting everyone learn from the other side, letting DeFi learn from traditional trading firms, letting the trading firms learn about DeFi. And the amount of outreach that we had was pretty phenomenal. I think we had over 70 applicants for the first cohort. So we took seven DeFi protocols in for the first cohort. We set it up where there were 2 engagements a week, really. Where one was a one-to-many engagement, where we had, I did a roundtable. Someone from Jump Trading did a roundtable. Some like Ernst & Young and a law firm did a roundtable. There was TD Ameritrade and someone from Asari did a roundtable. So we try to set it up so that we can have this broader discussion about DeFi and how these traditional firms are thinking about DeFi. and let the whole cohort sort of interact with each other and interact with the sort of the alliance, the traditional financial firms.
Given what we've seen, the volatility in the markets due to COVID, how do you think decentralized finance weathered the storm, and what does that mean for the future?
I think it weathered the storm pretty well. In any moment of volatility, even traditional markets have issues, as we saw in the same time period. Right? In early to mid March, there traditional markets had as many problems as DeFi and crypto markets. Right? Robinhood's going down. There were some failures of traditional trading firms. Right? So to sort of, I like to draw those parallels. Is that even traditional finance, which has been around for a lot longer than crypto and DeFi, they have issues during these time periods as well. So it's not that there weren't any issues in crypto. It's just that these are growing pains that happen even in traditional markets still. So I just like to remind everybody that while this is still new technology, it's a new ecosystem. It's still around. We did survive that stress test. There definitely were some headaches there. People definitely lost some money. That happened on the traditional side too. And the problem is that during these moments of volatility, liquidity dries up in any asset class, and the number of users in crypto and the amount of liquidity in crypto in the market cap of crypto is still significantly less than traditional markets. So there aren't as many participants to help sort of absorb or correct for that liquidity crisis that happens in volatility. But the encouraging part is that for the most part, everything survived, and hopefully the ecosystem will continue to grow so that as we see more volatility in the future, we have more of these events during these next cycles. There'll be more participants there so that we'll weather the storm better next time than we did this last time. But yeah, it definitely was interesting, and on the traditional side and the crypto side to be trading and being a participant through those events.
So I guess any particular new challenges that we didn't anticipate in the stress test? Did we see anything? Because I was reading about some of the stuff that was happening with DAI. I mean, it's one of the biggest market caps. Any kind of war stories that are interesting to share?
Yeah. So I think the interesting part there is that a lot of these DeFi protocols, they're standing up a two-sided market, right? So they're focusing on, or they have been sort of more focused on the retail side, right? Where they're trying to provide a service to sort of a more retail user that maybe can't get this service in from traditional finance, or they like the idea of the decentralized version better. But those people always need someone to trade against, right? There needs to be someone on the other side of that liquidity. And in DeFi, there's the AMMs, which are providing a little more automated liquidity, like the automated market makers. But then on the traditional side, there's the more like market making firms, right? And I think what you sort of saw is that in these moments of time, there isn't always enough liquidity in the system where prices move farther, faster than people thought or had planned for. And that's the hard part, right? Is if you're looking at these markets on a daily basis in a low volatility or normal volatility period of time, the volume and the liquidity looks like it's significant or it's enough, right? The problem is you never know what's going to happen to that liquidity during, huge events. So this wasn't like a 10% move. This was a multiple standard deviation move, right? This is something
when you don't sleep. Yeah, this is one of those you don't sleep.
Yeah, exactly. This wasn't a normal day, right? So that's the thing is how do you build these protocols? How do you build liquidity into these systems such that when you have this moment in time where volatility is so high, liquidity is so scarce, how do you build in the right incentives for people to step in those moments to provide better liquidity than, March 12th, right? And I think that's now something that people can focus on. It's like, okay, in normal markets, we have the right incentives to have enough liquidity for us to manage this business and manage the supply and demand from all sides. But what happens in those other moments? How do we design this? What do we change? What can we do to sort of make this a little more foolproof for these moments of volatility, such that it'll perform better next time?
What are the going forward opportunities, in your opinion? Is, there's people talk about yield farming, they're talking about flash loans, all those kind of things. Where do you think this is going to go? What excites you guys?
Well, I mean, obviously, with our participation in the DeFi Alliance, we're very excited about DeFi. The yield farming is definitely interesting. I do think that's a short-lived opportunity where I think you're already seeing the more assets that are being deployed on compounds, the harder it is to continue to get those really high rates of return. So I think there will be sort of a tipping point there where the amount of activity on the platform will sort of balance out that rate of return, such that it becomes less interesting for some people. But there's going to be the next compound where we saw a lot of activity on Balancer. They had a bit of an issue with one of their pools, but all of these new products and all these new products that are yet to go to mainnet, right? So like the interesting part, I think, for us is just that there's almost a new opportunity every day, right? The hard part is staying on top of the new stuff that's coming out, being able to analyze the risk, being able to make intelligent decisions in terms of where to deploy assets, and in what degree, sort of sizing the trade, sizing the opportunity and the risk to take advantage of them.
As you've been experimenting with DeFi, what other things to watch out for that you advise others? Is it insurance? Is it institutional custody that can support DeFi? Any things that you would kind of top of your mind right now, practical things that you just need to overcome to get there?
Yeah, I mean, I think the one thing I've been excited to see is how the user experience has improved over time on the DeFi side, where people like to make the comparison between crypto and the internet, where in the early days, you probably needed to know how the internet worked to use it. But now everyone uses the internet and they don't know how it works because you don't need to. Where there could be a similar path for DeFi, where in the beginning, even now, you sort of need to know a little bit about how all these things work to understand the risks, understand how to use them, and to use them safely and securely, right? But this focus on the user experience, I think, is going to make it easier to use these things, easier to move assets between protocols. But I think the main thing that I worry about is just understanding the risk, right? Is it's and part of that from to take a concept that we talked about on the centralized side was the counterparty risk of a centralized exchange, right? Of putting assets on this exchange. What is the risk that those assets are going to be lost, right? And there's a similar risk on the DeFi side, except that risk is not really with the institution, although sometimes it is, because the DeFi, the decentralization is a spectrum, right? Some things are much more decentralized than others. Some of these platforms, protocols have enough centralization that someone could impact assets there. But some of it is just, the smart contract risk is where I want, on the centralized side, we want to know who's running the exchange, what kind of customer service they have, what their history is. On the DeFi side, we want to know who's writing these smart contracts. How much can you find about these people? Because you can rely on an audit, but anyone who's auditing the smart contracts, they're a startup. So like they're, this isn't like they have 50 years experience of auditing smart contracts. And they're only spending a few weeks with the smart contract. With the founders and the people that work at the protocol that wrote these things, they spent months or years with these smart contracts. So who's writing them? How do they behave? And just sort of trying to continue to increase your knowledge of the protocol, the platform, or the asset you're actually dealing with, so you can better understand the risk, because that's going to help you potentially increase your return from this activity, or avoid the loss of assets.
I'm going to wrap it up. Thank you so much for taking the time to talk to all of us here.